The Disney streaming strategy has been catastrophically bad, even if most people don't know it. Disney, with Disney Plus, Hulu, and ESPN, plus more, is in the hole something like $100 billion. It'll take that much profit to dig them back out again. And yet there are investors who simply don't realize and are now asking for Disney to focus on their streaming, their major failure, and drop the emphasis on the theme parks that help them survive. We'll explain why that's a really bad idea right now. Hello folks, welcome back to the place that is bringing information to the world that they simply need to know, especially when it comes to entertainment. That's our forte, and we're happy to make it so. Today we are bringing you news about investors who seemingly believe that Disney should be a mostly streaming Hollywood kind of company and not the theme park company as it is currently constituted. That's because they fail to recognize what it is that is causing the theme parks to slow down economically, and because they don't peer behind the veil, well, they're confused about just what's going on with Disney streaming, especially under Disney executives Alan Bergman and Dana Walden. Today, we're pulling that back and showing you what's behind a house of mouse that has real problems and probably should fix their theme parks first and foremost. Here's the panel. Disney theme parks have seen a slowdown. Is it a temporary blip? This out of Yahoo Finance. And this is written by Alexandra Canal, who we have read her stuff before. Get ready for one of the biggest colossal misunderstandings of this company you've ever read, folks, from people who should know better. Disney's parks business has historically captured the lion's share of profits for the entertainment giant, bringing in about 36% of the company's overall revenue in the latest quarter. But recent signs of a slowdown have led to concerns that theme parks could be losing their magic. I just want to say that again because we so often say this. 36% of the company's overall revenue came from the parks. Now, if you want to know profits, it's even higher. And Disney World on its own is 1/3, typically, of all of this company's profits. It's huge. It's so big that this company, which has so many arms and tentacles spread across so much of entertainment, could still rightly be called a theme park company. Everything else is secondary. In Disney's latest earnings results, weakness in the parks division dented an otherwise positive report after the company reported a 6% year-over-year drop in domestic operating income and pointed to a moderation of consumer demand toward the end of the second quarter. That moderation, executives warned, could continue over the next few quarters. We call that, perhaps, a year. We're certainly seeing consumers behaving in a way I wouldn't call it recessionary necessarily. They're watching their pennies a little bit more. Disney CFO Hugh Johnston previously told Yahoo Finance. By the way, the reason that Hugh would not call it recessionary is because they're spending it on other things, just not Disney. Florida tourism and travel, by the way, continues to break records year after year. My one area of concern is whether it's a longer-term issue, as prices have gotten a little bit out of control versus a shorter-term, economically tied type of issue. Morningstar analyst Matthew Dolgan said in an interview, I don't know how much of this is a natural cyclical thing versus whether they have pushed the envelope a little bit too much on pricing. But that's the biggest thing that concerns me, rather than their investment in the business. To understand how Disney found itself in this position, it's important to look back a few years to the post-pandemic travel boom, which boosted a year-over-year growth rate at the parks. Well, that boom continues on, just not for Disney. It seemed like we kind of had a macroeconomic bump and everything was aligned for things to be really good, said Dolgan again. But nothing lasts forever. And that might not be such a bad thing. Well, unless you want to make money. For things to pull back a little bit from where it was, first of all, not surprising. And second of all, I don't think it's concerning, said Dolgan. Oh, that's what Circuit City was saying a while back. That's what Radio Shack was saying. Hey, I heard this from the Sears people. He said year-over-year growth will likely continue to moderate as customer dollars shift towards other forms of entertainment. However, the business itself remains strong. And here's where we get into Disney's big bet, folks. This is why Disney needs to reassess. Last year, Disney announced plans to invest $60 billion. Jonas, you've heard that's a little bit more now. We'll talk about that in just a moment. But it says, with the expansion, I think there are a lot of opportunities for them to really grow, Dolgan said. Third Bridge analyst Jamie Lumley agreed, categorizing the expansion as a way for Disney to edge out competitors like Comcast. Because Disney raises the price on their parks every single year, they're definitely competing one with another, perhaps cheaper uses for people's leisure dollars. Building out these bigger, grander, more immersive experiences is a way to justify the cost. This is a business that they are betting on, and it can definitely be a people mover. I get the pun. Haha. What are they talking about? Well, they're talking about trying to chase after Hollywood and movies and TV shows. And here's what we've got. The company has been more focused on mitigating losses with its streaming division, with the company reporting its first quarter of streaming profits last month. For that reason, Lumley thinks DeMauro likely won't be Iger's replacement. Oh, he's listening to us. Instead, he believes Dana Walden, co-chair of Disney Entertainment, who currently oversees Disney streaming and television studios, is probably next in line. Oh, really? He says, as important as parks are, that's when you know things are going to get bad here. Whoever is in the CEO seat after Bob Iger, it's really important that they have a deep understanding of how Hollywood works, how talent relations work, how the content strategy should be borne out. Josh DeMauro definitely has done a lot of good things when it comes to running the park side of the house, but ultimately there might be some other factors when it comes to looking at who the next CEO would be. It says the park's multi-billion-dollar bet has yet to pay off. This is the most insane article I think that I've read in a very long time because the parks saved this company. They continue to subsidize the suck that isn't all the rest of the company. They're $100 billion in the hole with Disney Plus and Hulu and ESPN Plus. This is insane. I don't think that they should elevate Josh DeMauro because I don't think he's done well. But the idea that you're going to put the woman who is presiding over this horrific performance for streaming for Disney Plus, investors have no clue if this is the kind of thing that they're being fed on a daily basis. Jonas, your thoughts on this one?
I just think that this company right now, and forgive me if I start to repeat myself here, they need to stop talking in terms of financial figures for investment and start talking in actual concrete terms. And unfortunately, there are enough people familiar with Disney. It's not just us anymore. Everyone else is also saying that when they announce something, it's probably not going to happen. The only thing that moves the needle with Wall Street is actual firm financial data or a forecast. But Disney is not willing to do an actual forecast unless they know what it is going to say, because the SEC and Wall Street will hold them to that forecast. So until then, it's all smoke and mirrors. In the theme park industry right now, essentially Epic Universe has done what hasn't been done in Florida for a very long time. And I want to say it's been at least 20 years since they've had a new theme park in Orlando that is on that scale. They have shown what a new theme park should look like. And instead, Disney's throwing out concept art. Disney's throwing out blue sky initiatives that when the people that they want to be focused on this stuff start focusing on it and saying, hey, this doesn't line up with that. This character is not in that production that you put in the concept art. Is this actually something that you're planning on doing? Disney doesn't have a good answer for that. So they're struggling to put anything concrete out there that is either going to please the diehard fans, and they aren't able to put anything out there that is going to please the number crunchers and the bean counters. So Disney needs to make something great and then come back to this idea of trying to move that stock price using the theme parks.
I think that's
Go ahead.
I'm sorry. I was just jumping in. I think they have some substantial debt issues, as you pointed out. Currently, they're managing $47.5 billion in debt proper, right? That's including a lot of other things as far as all current and non-current debt. But they also have liabilities beyond that beyond the next 12 months, which is $61.4 billion, and I think those liabilities go up even higher after you consider sports rights contracts. So that for the long haul, they've already obligated themselves to a significant amount of spend. The $60 billion over the decade was a baloney sausage thing from the beginning, because they were committing to spending basically a maintenance, amount of money on the parks, absent the last 5 years when they actually committed to spending said cash. They really haven't done proper investment in the parks in over a decade and a half now. They've been...
Oh, come on. Culture, they spent so much on Epcot. Look how well it's gone.
Yeah, well, I think they've been recoiling from park spend because they were just trying to limp along with that cash cow. The problem is when you limp along, eventually the deferred maintenance and everything else catches up. Not to mention the fact that because of the lack of innovation, retention of high quality employees, and meritless hiring, you ended up with a disaster that is Epcot as it is without anything being fully realized in that park. Because if you
Right,
look around,
a brain drain in Imagineering led to a cash drain that gave them nothing in return.
yeah, exactly. I mean, and again, I mean, Disney can spend $1 billion on absolutely nothing, and they proved that on the regular. The Commerce Tower that was promised did not get built. You got a destroyed and half rebuilt Communicore area, and you got some malfunctioning sewer smelling, walk of water thing that is no better. In fact, far worse than the jumping water fountains that are just across the way at
Culture. We need to invest.
Inventions.
They need to invest in Disney Plus. Drop the theme parks. That's what the article's saying. Drop the theme parks. They're going to be on the way down no matter what you do. You can't avoid it.
That is a clear misunderstanding of what drives this company to begin with. The flywheel is kept spinning by the constant creation of media, and that media is then feeding the theme parks and the joy and the nostalgia that the theme parks are on. But if you start tearing out the nostalgia, again, not understanding what your business model is and not understanding who brings people to the theme parks, because it's not the kids going there. I mean, they wouldn't be going there by themselves. They're taken there by their parents and their grandparents. And if you don't have nostalgia, which is what tugs at your heartstrings when you're an adult, that's pulling you into the theme parks as the adult, you're not taking your kids to Disney anymore. They've destroyed several of the things and proposed to destroy more. And again, just go ahead.
Well, I was just going to toss to Marvin real quick.
Yeah.
Josh DeMauro being passed over now by these analysts. They want Dana. I think that's a bad idea. Both of them, I think, don't deserve to be the next CEO, but Dana far worse than DeMauro.
Nobody that currently exists within the Walt Disney Company should be running the Walt Disney Company.
Yeah.
This Bob Iger assembled team has done nothing but drive this this entire operation from just
60
evergreen. Yeah.
60% decline in total value for this company since it hit its high under Bob Chapek. Right.
I would say that your best bet would have been to go to somebody like, throw all the money in the world at like a Leslie Moonves or, somebody else from elsewhere in entertainment who has experience running studios. You bring them in as an outside hire and then they just clean house because this is just not the way to run a business. And no matter who you replace Bob Iger with from the current administration, I guess you could call it, it's all just going to be more of the same. Big Bob is still going to have a direct line to the CEO, and he's still going to be calling the shots.
Well, get ready because Epic Universe is on the way, and we'll find out just how much Disney can hurt when those theme parks are not being invested to wisely, and when they begin to perhaps focus more on their streaming, which has been demeaning to all the investors out there still waiting on a return for that investment. Folks, we are now at the end. It is closing time. One more call for you to click the like button. So empty your subscribes and shares. No, don't do that. Don't empty them. Sorry, it was bad. We were trying to do a parody of closing time. Never mind. Folks, we hope you had a good time. It's an honor every time that we get to share our time with you. Thank you for inviting us into your day. We hope we're adding value every single time. It's always what we aspire to do. All right, until the next time, all we ask is keep learning, keep growing. And folks, no matter what, find a way to keep having fun.